David, let's talk about this 50 billion fund that's designed to sell off state assets. We've all been following Greece for quite some time, and let's face it, Greece hasn't exactly got a great track record when it comes to selling state assets. What is going to happen? How do we get from where we are down here all the way up to here and 50 billion?
Well, the number does seem pretty realistic. You remember that actually the target for privatization proceeds from the first bailout was actually 50 billion euros.
Yeah.
To date, about 5 years later, they've sold less than 4 billion euros worth of assets. So it does look pretty unobtainable at this stage.
Talk about what could be sold. There's some nice land just north of Athens. It's a big old airport. They could sell that. Kind of walk us through what could be in the story.
Exactly. So there are basically three primary assets the Greek government can sell. Bank shares. The problem is they're mostly probably close to worthless. When the banks closed on the 26th of June, I should say when the stock market closed, the government's stake in banks is worth about 7.5 billion euros.
So they'll be selling bank shares to raise money to recap the banks.
That's what I was just...
Well, I'm just going through this. This doesn't really make sense. These are just the options.
Sorry.
So they were worth 7.5 billion on June 26th when the banks closed. The value of that's probably nosedive, so it's a bit of a non-starter. They have stakes in corporate assets. The problem is that it's very difficult to sell corporate assets in a depressed economy.
And the stock market's shut, I think, isn't it?
And the stock market is shut.
Slightly problematic.
The unions can block PPC and Hellenic.
Yeah, so that basically leaves real estate as the other option there. The Greek government does own reportedly about 70,000 pieces of property, but it's been very difficult to attract foreign investors because there's a lot of regulation that goes along with the development of that property. And also there are other problems too. There are a lot of legal disputes who actually owns the property due to these very old laws that predate 1915. The Greek government actually isn't even really sure of what it owns. There's a lack of central information about this, lack of a land registry.
This deal, Bob, seems fairly leaky. We've got issues with the IMF, and as David is pointing out, this 50 billion fund doesn't seem to hold water in terms of the numbers that are being projected. You wrap this all together. We've got a deal which the markets are assuming is done.
Yeah. Really? Yeah. Look, I mean, I think the market wants to see a great deal, but I think ultimately the market's kind of realising it's another fudge. The only thing I think the market's trying to figure out is how far have we kicked the can down the road.
Yeah.
Is it a couple of weeks? Is it a couple of months? Or could it be even a couple of years? And I guess we'll figure that out. I guess it's more likely a couple of quarters at best, rather than a couple.
That was what I was going to ask David. How quickly do people figure out kind of that this isn't going to work?
I think the analysts in the market have figured that out already if you read what's been written since then. However, I think part of it was also for domestic consumption in the creditor countries. Basically, they can go back to their voters now and say, listen, the Greeks are going to finance themselves 60% of the new bailout, and probably the average person asks fewer questions.
But the German MPs, not even MEPs, German MEPs know this.
Look, to Tsipras's point, I think, so we're trying to hoodwink voters in the countries that are paying.
German MEPs too know that the debt is unsustainable, but yet they still insist they pay it. So there is a certain appetite for solutions that seem to present a nice fix, but in reality don't.
Seems to me we came up with a solution just in time to make sure Greece didn't default on a payment to private creditors.
Yeah.
i.e. a samurai bond payment.
And the ECB coming up.
And various other payments. I think the thing we're also trying to. I think we're hoping, or the Europeans are hoping, that we've got an agreement that will get us through, hopefully, the Spanish, French, and German elections over the next couple of years. I just don't think it's going to last, and I think we'll be back. You'll be back. No kidding. You'll be back in Athens, perhaps at the end of the summer.
I'll book my ticket. Yeah. Bit of sunshine. When you kind of wrap this all together, and you look at the IMF's line on this. Did the IMF numbers make sense? They're talking about debt to GDP getting up to 200%.
Yeah, so clearly that is unsustainable, and that's why the IMF has renewed its calls for a haircut. If you look at the last debt sustainability analysis the IMF released not so long ago, they assumed in there, for example, only 2 billion euros in proceeds from privatization. So it gives you an idea as to the difference, the large gap between the numbers the IMF is talking about and the numbers the euro area creditors are talking about. And from my point of view, the IMF numbers are a bit more credible.
Well, the IMF have less of a vested interest in this whole project, and secondly, they're experts at bankrupt countries.
Yeah.
Right?
Yeah.
People like Juncker don't have an expertise there.
And of course, it's always easier to suggest a haircut when it's not your money on the line.
True, but the haircut's interesting because normally the IMF playbook is that you have a massive currency devaluation. Mm-hmm. You can't do that, so you've got to figure out kind of other mechanisms that are going to work. And is a massive haircut... if debt is unsustainable, it is unsustainable. Mm-hmm. QED, it needs to, at some point, be dealt with. Is the IMF... If you can't deal with the currency, is the only way to deal with the situation to deal with the debt? Because you can't generate growth. You're dealing with an internal devaluation. You're dealing with all kinds of other things that aren't normally in the IMF playbook. Yeah. So this is what the IMF's conclusion is.
Yeah, they're somewhat separate issues because the currency devaluation would help make the exports of the country, the economy...
Sure, but then you feed back into the sustainability, the numerator-denominator story when it comes to the debt.
Exactly. So, but this comes down to basically IMF is saying the Greek government cannot produce the income required to service this debt in the long run.
So let's just get a quick kind of... Is this a good deal?
For who?
Greece.
I don't think it's a good deal for anyone. Right. I think it buys the market a bit of breathing space. It perhaps allows lots of people to blame lots of other people for when it falls apart because it's such a convoluted deal.
Yeah.
So the IMF has an alibi, the Europeans have an alibi, the Greeks have an alibi, Mr. Tsipras has just given us his alibi.
Yeah.
So when it all blows up, which I think it inevitably will, because Greece will not be able to deliver that income, simply put, right? We'll have to start again. I think we're going to get to debt restructuring or fiscal union. They are the only options.
From an economic point of view, does it make sense when you run the numbers?
The deal? No, it doesn't. As you said, I think we'll be here for quite a while discussing Greece. It's not an issue that's going away anytime soon. A lot more summits ahead of us.